Today we're going to take a closer look at Twilio. This is a stock that's down over 80% from its all-time highs. I want to kind of take a closer look at some of its bullish thesis right now. I'm going to mention 3 different points, and I'm also going to talk about one bearish point that might be affecting Twilio at the moment. If this is your first time here, make sure to hit the thumbs up. Make sure to hit the subscribe button, check out the pinned comment for a lot of great links, and also check out my tech channel where I post some great awesome tech news. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So as I am recording today's episode, Twilio is up about 4%. But like I mentioned, from its 52-week high, the stock is down roughly 81%. So let's start off with the first bullish point that I have on Twilio, and this is the market it hits and the solutions it provides. So for those not familiar with Twilio, they have created a toolkit to help developers around the world use Twilio to unlock the magic of communications to improve any human experience. So they have created APIs that are simple enough for any developers to use, yet robust enough to power the world's most demanding applications. So you can see here they're working on numerous products. So let's say you are kind of developing an application and you want to have communication in that application, you are going to most likely use Twilio to kind of bring that to your app. And here, like I mentioned, one of my favorite things about Twilio is that this is a toolbox investment. And what I mean with toolbox is they don't only have one tool to help out with this communication in application, they have numerous tools, which in my opinion makes them a stronger and more sticky business. Here we can take a closer look at some of their customers right now. We can see they are big players. Lyft uses them obviously to kind of allow communications between drivers within customers and other associates. Another one of my favorites is Airbnb that uses automated SMS messages and confirmations to automate accommodation bookings for hosts and guests. Then you have a streaming company like Twitch that is using Twilio for some form of security using 2-factor authorization. And as the world continues to become more digital, I do believe the kind of need of communication via application is going to increase. I do believe that many think this is just a COVID stock, and only during COVID times would people want to develop some form of communication on their application. But I don't think that's the case. As we continue to grow and advance in technology, I do believe we're going to need more in-app application to kind of do things like customer response, customer acquisitions, maybe even advertisement and kind of security solutions as well. So I do believe this is a market as a whole that will continue to grow. My second bullish reason for Twilio is their overall growth. We can see in their most recent quarter, which was the first quarter, they did show revenue growth of about 48%. This is a company that has made a few acquisitions, so organic revenue growth is still up about 35%. And look, that dollar-based net expansion is 127%. They also did give guidance for the upcoming quarter, and they continue to expect 36 to 38% year-over-year growth and organic growth of around 27 to 29%. And here we can just take a closer look at some charts of quarterly revenue. You can see that nice uptrend quarter over quarter. Same with organic revenue trend, a nice growth quarter over quarter. And then we can see their dollar-based net expansion continues to be above 125%, which I do believe is pretty impressive. Outside of that, their number of customers have grown. In last year, it was about 235,000. Now they're sitting at 268,000. So customer count is growing, and that, in my opinion, is another bullish reason. Now, the third bullish reason that I have for Twilio is just their overall financials at the moment. If we take a closer look at their balance sheet, they have about $5.2 billion in cash and short-term investments, so plenty of cash at hands. They do have about $1 billion in long-term debt, but if we take a closer look at that debt, none of that is due anytime soon. They have about half a million in 2029 senior notes, and they have another $500,000 in 2031. So that's roughly 8 to 10 years from now. So again, with that strong balance sheet that they have in forms of cash and very low debt, I'm happy with their overall financials. Unfortunately, the company is not positive in cash flow from operations, and they're not positive in earnings, and that's something we're going to take a closer look at in later on when we discuss some of its bearish points. This kind of goes with financials, or maybe might even make its own independent reason, but I do believe valuation for Twilio right now is super impressive. Price to sales ratio sitting at about 4.5. This is one of the cheapest it's been since probably even 2018 and 2017. Again, we saw huge growth. I believe the market is there, huge customer acquisition still, huge dollar net expansion rate as well. So for it sitting at these price points and valuations, I do believe it's a very attractive value right now. And even though I do believe Twilio right now has huge potential of providing great returns, this is a company that I also believe has high volatility. So this is a company that if I can't withstand volatility, I wouldn't open a big position, more of dollar cost averaging until I kind of build up the perfect position sizing. And that all depends on who you are and how much kind of volatility risk one can have. So like I mentioned, I also wanted to take a closer look at one of the bearish reasons with Twilio, and like I kind of talked about it earlier on this show, the company is not profitable. We can take a closer look that this company has a lot more expenses. Look at that, operating expenses is roughly half of this company's total revenue. And then if we take a look at total operating expenses, that actually brings this company for a loss in operations. I do want to say this depends on how you're looking at it. Most of that loss is actually coming from stock-based compensation. About 155 million is coming from stock-based compensation. And if you add back stock-based compensation with amortization of acquired intangibles, then this company is actually profitable on the non-GAAP income from operations. At the same time, like I mentioned right now, non-profitable companies are definitely taking a bigger hit, but because Twilio does have a very strong balance sheet, I would put a little less risk behind it. Again, I do believe the market Twilio hits is one that can definitely grow from here and one I am bullish in. So let me know your thoughts on Twilio on the comments below. Take care, have a good day, and see you next time.